what is it like to get how do I get a term sheet? How are they going to value the company? How will they due diligence and close the investment? The other big question I think founders often have is like, well, what is life like then if I go and raise money and I have, Aaron now is on my board, and I have a VC on board. What does that even mean? How is life different? What's better? What's worse? Talk a little bit about how you work with companies on an ongoing basis, and some of the good, some of the bad, ways that it can get sideways, not necessarily with your businesses, but things you've seen before. How should founders think about life after investment?
Yeah, I mean, I think, once we're invested in a company, our goals with them are aligned to maximize the value of the company. And so we're kind of all in on doing whatever we can to help do that. And usually that's them pinging us and us, but also us, like, we're looking at things like what customers can we introduce them to. We just brought on a full-time director of talent to help them with sourcing execs as they build up their exec team. And all this is free to our companies. We don't charge for any of it. We have a whole team of associates and VPs that can, work supervised by a partner, like work with the companies to help do work for them, whether it's building out a financial plan or looking at, potential acquisitions or helping on a go-to-market project. And so, we kind of see our job as doing whatever we can to help make them successful. And it's funny, I have, Slack on, and I'm seeing Slacks. I'm on Slacks with half the founders I work with, and I've had multiple Slack messages from them during this session, pinging me with questions or things, we could potentially do to help them. And so, I would say, like, we don't look at it as an overly kind of formal relationship, but we talk to them once a quarter or every other month at a board meeting, and that's it. We kind of look at it as a partnership where a lot of times they're pinging us, depending on the stage of the company, whether it's, every other week or once a month, saying, like last week I had a company say, hey, we're working on a new sales comp plan. You've seen a bunch of these. How can you, can you help put this together for us or with us? I do think that, like, to your point, where can things go off the rails? And I think it's important to remember that, your investor is in this with you, and the good, the bad, the ugly, they just want to be able to help. And so as long as good news travels as fast as bad news is okay. It happens. Like, every startup goes through bumps in the road. And the worst thing you can do is try to hide the bad news, because then that just breaks down trust. The best thing to do is plenty of our most successful companies, when something bad happens, they lose a big customer, employee issue, something like that, website goes down, his service goes down, I'm usually, they're calling and texting and saying, hey, this happened. How can we figure this out together? And it's, that's just part of being invested in early stage companies. I do think the one area, once you kind of have, your first board member investors, there's a little more tightness around just like doing financial closes and having financials and, board deck, but that investor is there to help you put that together too. And even though it may not seem like a good use of time, you kind of can't measure what you can't manage, what you can't measure. And so it may seem like a little bit of overhead, but they're there to help you minimize the overhead, and I think it will make you better long term. But we really try to be cognizant at being stage appropriate for that type of reporting, because we have LPs we have to be able to report to as well. And so we do try really hard to be stage appropriate and not take unnecessary amounts of time on reporting at the earlier stages.
It makes a lot of sense. I mean, my experience, I know with my software company is that there's some stuff that feels like overhead, but it's actually part of the benefit that you get from getting an investor on board, is you get to grow up a little bit as a company, and that sometimes it has a little bit of pain, temporary, that goes with it. But I think having that a little bit of formality that you probably don't have as a bootstrap business is a good thing for the company, particularly when it comes time to sell the business, which is what I wanted to go to next.